Digital currencies aren't a new term in the 21st century. Nowadays, most countries' financial systems mostly rely on electronic forms of cash. The conventional function of the correspondent bank as a service provider and a facilitator of the payments in the settlement process should be eliminated by the ability of digital currencies to transmit money directly between parties on a peer-to-peer basis. Hello guys, and welcome back to Proactive Investing. Do you want to know further details about why digital currencies will destroy banks? Well, if so, keep watching this video till the very end. Smash that like button and subscribe to Proactive Investing to never miss any of our content. While some nations, like El Salvador, have declared Bitcoin to be legal cash, other nations have little interest in dealing with this virtual money. A digital money called Bitcoin can be moved directly from one person's account to another without the use of a middleman. Because of its complete decentralization, this digital currency can be transferred without the aid of a central bank. Additionally, China, one of the economies with the greatest rate of growth, has outright outlawed cryptocurrencies in its nation. As the conventional currency is totally centralized, the government has the authority to manage it. In order to manage the economy and regulate how people spend their money, the government can change financial policy. Additionally, the government is able to monitor any criminal activity that people may engage in using conventional currencies. As a result, the government can affect the economy because it controls fiat money. The government and banks no longer have the authority over currency thanks to the invention of Bitcoin. This is due in fact to the fact that Bitcoin is a decentralized currency whose underlying technology prevents any government from controlling monetary policy. According to many experts, the 2008 financial crisis, which was mostly brought on by central banks' policies, was the catalyst for the establishment of Bitcoin. Bitcoin has the ability to dramatically destabilize any centralized banking system because of its peer-to-peer network and decentralized approach. Bitcoin has certain fundamental problems and redundancies though, making it challenging to finally replace central banks. The widely reported growth of Bitcoin and other digital currencies may have significant effects on financial institutions and central bank policies. Consumers around the world often conduct transactions without actual cash, using credit cards or mobile phones to pay, even though it is still widely utilized in the majority of countries. Furthermore, a large portion of the currency that central banks print only exists in digital form. Therefore, the concept of digital money is not entirely novel. In recent months, interest in blockchain technology and decentralized finance has exploded. According to reports, there are currently 6,000 cryptocurrencies in use, and 10% of the world's population has made an investment. Major central banks are taking notice of digital currencies because of their distinct characteristics and expanding market dominance. In an effort to develop and accept blockchain technology for the creation and use of digital sovereign currencies, or CBDCs, several regulatory agencies and lawmakers are hard at work. Fiat currency printing is governed by central bank policies. For many years, this has been the main way to create money. That implies they are also in charge of the production and distribution of fiat money. One of the major issues with such a structure is that it places an excessive amount of faith and accountability in the judgments of a single central agency. Numerous studies show that in the past, central banks pursued ineffective monetary policy initiatives which led to devastating recessions. Since Bitcoin is decentralized virtual currency, its incorporation into established financial institutions would restrict the ability of the government-run banks to control the money supply and exchange rates. The lack of this centralized power simplifies the creation and distribution of money by getting rid of the middlemen in the business dealings. However, giving control over the economy to a single authority also fosters confidence in the system. Government-issued fiat currencies, in contrast to cryptocurrencies, are governed by a reliable authority and a fixed exchange rate. The emergence of Bitcoin and other cryptocurrencies has also resulted in a fierce rivalry and profoundly altered the financial markets. Since Bitcoin is decentralized, it's more appealing to businesses, investors, and individuals than traditional paper money because it enables them to send and receive money anywhere in the globe without being constrained by central banks. Furthermore, remittances made using Bitcoin are much quicker, safer, and cheaper than those made with credit cards or other forms of regulated payment. Consequently, more people are compelled to use Bitcoin and other electronic payment methods. Many businesses and cryptocurrency trading websites like Bitcoin Revolution have consistently reported rising daily Bitcoin transaction volumes. Bitcoin is currently widely used by companies, investors, and individuals as a form of payment and investment. To diversify and shield their portfolios from the hazards of central banks and government-induced market manipulations, major enterprises have amassed large Bitcoin holdings. The fundamental benefit of decentralized finance and blockchain technology is that they do away with the necessity for a central regulating authority. They give their users back control over transactions and data privacy. Despite the fact that most countries are currently developing CBDCs, let's consider how their introduction might impact the financial sector. The central bank of a nation will directly create and issue CBDCs. Like currency, it will often be backed by reserves or gold. CBDC has the potential to offer major benefits, including decreased reliance on cash, higher seigniorage due to lower transaction costs, and reduced settlement risk. Does this imply that domestic banks' functions as financial intermediaries, deposit holders, or lenders could be usurped? CBDC is a currency that does not pay interest and its influence on bank deposits may be minimal. The Economic Times claims that because credit unions and cooperative banks depend so largely on cash, that they will be mostly affected. A hasty switch to digital money could cause widespread confusion and take some time to accept. Do you think that in the future paper money will just be a talk between people? Will digital currencies really outgrow our current ones? Comment down your thoughts below. While watching this video, don't forget to like, share, and subscribe to our channel. Digital currencies and other advancements in payment systems may speed up and lower the cost of domestic and international transactions, ultimately allowing more low-income and rural families access to the financial system. Payment methods will undoubtedly become considerably more effective. One can use payment systems that have been decentralized and that are intermediated, not via the traditional banks, but through other platforms in China and India to carry out various modest microtransactions with street sellers. And also, it is clear that this might spread quickly. The ability to move money from one cell phone to another in real time has been made possible by new technology, which makes it easier for money to reach everyone, and that's an admirable future vision. The rules and guidelines that other financial institutions use to carry out financial transactions are created by the central banks. Almost all central banks throughout the world use intermediaries in cross-border money transfers as one of their key policies. Transparency is also difficult to maintain because central banks have the final word on how financial organizations behave. With its blockchain technology, Bitcoin provides a precise and irreversible public digital ledger, resolving the issue. Bitcoin miners utilize encryptions that only users can decrypt using their private keys to validate transaction data in chains of blocks. By implementing Bitcoin, central banks and other financial institutions would be able to guarantee transparency in financial transactions, enhancing service delivery. Although it sounds fantastic, digital currencies and related technologies are likely to lower transaction costs and the cost of getting and sharing information. This could lead to instability of financial markets and exacerbate the market contagion. They can jeopardize conventional banks' business strategies and their function in the financial system, making it challenging for central banks to uphold financial stability given their primary way of operation is through the banking sector. The concept of allowing the general people to deposit money electronically at the central bank is being discussed by numerous central banks, albeit very few are taking it very seriously. Only a few central banks, including those of Tunisia and Ecuador, have so far launched their own digital currencies. Sweden is debating whether to introduce an electronic currency since its use of cash is dwindling more quickly than that of practically any other major economy. A central bank may pursue negative interest rates during an economic slump and prevent its market share from being taken over by Bitcoin by issuing its own digital currency. However, suppose depositors withdrew money from traditional banks to deposit it at a central bank. In that case, an official digital currency might significantly limit the function of traditional banks as middlemen and lenders and cause significant issues during a financial crisis. Despite their significant volatility, digital currencies are becoming more widely accepted as a reliable form of payment and a store of wealth. That does not, however, make it sufficiently potent to endanger the functioning of central banks and conventional financial systems. Central banks will still be used by a number of nations to run their economies. What do you prefer? Digital money or paper money? Do let us know in the comment section below. We hope you found this video interesting, and if you did, like the video and subscribe to Proactive Investing so that you won't miss any more news. Thank you very much, and we'll see you next time.